still looking at a potential for a June rate cut. With that in mind, what do you do with your portfolio?
Right. So I think if they do cut in June, it's kind of insurance. I think they knew when they're raising rates, the first part of it, 11 times, they raise rates, and then we kind of maybe take a couple back to make sure we can balance out and so forth. I think too many people are getting hung up with the economy. Again, of course, we have to look at GDP. We have to look at inflation. We have to look at rate cuts. But right in front of us is one of the biggest opportunities we've seen. I mean, really, it's a tale of two markets. It's technology and everything else. And it reminds me in the mid-1990s when, the birth of the internet, we all ran out to get PCs. What investors don't see here, unfortunately, in their own naked eye, they don't see these servers. They don't see like warehouses of servers being bought. It's not that tangible. But what we're seeing is probably one of the biggest capital expenditures in the history of the market. So I say that it's really important that don't get caught up with how many rate cuts and what the Fed's doing. Again, really focus on some of these growth companies that you can make significant progress with. And that's kind of our forte is, again, we are growth managers. We certainly want to stay away from falling tops and doing all these type of things in front of us. We have a really nice runway to make some good money here.